Hello traders, James Stanley with StoneX and Forex.com. President Trump had a comment yesterday that I thought was interesting, and I wanted to explore that in this video. He said that cryptocurrency takes pressure off of the US dollar. Now, the reason I found this interesting is because it really harnesses a couple of the main drives of his administration, both support for cryptocurrency and the desire for a weaker US dollar. But I think if we unwrap that statement, there's a little bit more in complexity. And, well, let's just get to the chart, start chopping this up. First and foremost, when we're talking about currencies, they're unique, they're special, in that they're the base level of the financial system. Now, when I look at DXY, it may skip over that part because this is a singular asset. But think of it from the perspective of, say, the euro. If you ask somebody the value of the euro, they can't just give you an answer. They then have to ask, against what? Against the US dollar, against the British pound, because the value of a euro is a relative thing depending on the currency that we're grading it against. British pound as well. If you ask somebody the value of the British pound, they then need to reply, against what? Are you asking about euro pound, pound dollar, pound yen? These values in these currencies, these underlying currencies, are constantly changing and shifting. And the value of the British pound is going to be based against what you're valuing it as. That's why in a currency pair, you have two sides. You have the base currency and the quote currency. The first currency listed is the base currency. That's the currency that's actually being quoted in that currency pair. The second currency, or the counter currency, often called the quote currency, that's the currency with which it's being valued in. So to say euro dollar is like saying the value of 1 euro in terms of US dollars is X. Right now, it's 115.40. So $1.15 and 40 hundredths of a cent. That's the value of 1 euro in terms of US dollars, or British pound against US dollars. Right now, currently valued at 131.349, so let's round it up to 131.35. The value of 1 British pound in terms of US dollars is $1.31 and 35 hundredths of a cent. Making it simple. When we look at DXY, however, and this is what Trump's primary focus office is, the US dollar, you don't see a quote currency. And the reason for that is because the DXY is a basket of underlying currencies. This is the ratio. This is the DXY basket. Now, admittedly, this is antiquated. This was made in 1973. There was no euro even on the radar at that point. All we had was a comment from Napoleon saying that we needed a type of United States of Europe if we ever wanted to avoid these constant skirmishes that would show within the continent. This basket is heavily weighted in the euro, and the reason for that is in 1973, that was very much the focus of capitalism on European countries and the U.S. Now, when the basket was created, it was underlying currencies like the German Deutschmark, the franc, the real, the peseta, the lira. And when the euro came into inception, all of those currencies were just conglomerated into one massive euro allocation, 57.6% DXY. Now, speaking to the antiquated portion of that, the sole allocation of the dollar basket to Asia is 13.6% with the Japanese yen. 11.9% for the British pound, 9.1% for the Canadian dollar, 4.2% for the Swedish krona, and 3.6% for the Swiss franc. That's it. That's the dollar's composition. Now, if President Trump is going to get a weaker dollar, he's going to need to see these currencies strengthen. That's the give and take of the DXY basket. Because if these currencies strengthen, then we can see this currency weaken. And that's very much what happened in the first half of the year. As a case in point, we can see the US dollar topping on January 13th. The DXY basket set a high on January 13th. President Trump was inaugurated later in January, and we began a steep and dramatic fall. Initially, it was a sell-off that was rather calm in February that really heated up in the month of March, all the way until we set this significant swing low down in April. Now, let's look at the euro. in terms of USD. And euro dollar, same story. We set a low on January 13th. The month of February was noted with oncoming strength that was still somewhat restrained. But it was here in early March when the euro really went to work. Reversed, went into the steady stream of higher highs and higher lows, all the way until hitting this swing high on April 21st, the same day that USD hit a low at 98 in DXY. Now, there has been a bit of divergence since, but similar. You could see where we have this rising wedge pattern that had built, taken the low on May 12th, all the way until we had the break right here, earlier in October. The Fed's rate cut. On September 17th, we had the fresh high in the euro, which triggered a series of lower lows and lower highs in euro dollar. Well, let's look at that in terms of DXY. Same story. We had the low on May 12th in euro dollar. We have the high in DXY on May 12th in USD. We had the slow build of a falling wedge pattern, the exact opposite of the rising wedge that had built in euro dollar. We broke out from that formation in early October, again, very similar to what happened here in DXY. And then also notice, we set the fresh low right there on the Fed's rate cut announcement, which then triggered a series of higher highs and higher lows. Now, if President Trump is going to get what he wants with USD weakness, and let me share a quote with you to illustrate how clearly he said that he wants this. This was from July 25th. He said, "So when you have a strong dollar, one thing happens. It sounds good. But you don't do any tourism. You can't sell tractors. You can't sell trucks. You can't sell anything. It's good for inflation. That's about it." So, again, it's clear that he wants USD weakness, which is very much what he had in the first half of the year. But currencies, again, are unique. And that if we're going to see this continued weakness in the USD, we're going to need to see continued strength in the euro, which then brings on repercussions to the Eurozone economy. But perhaps more to the point, ever since the Fed started cutting rates on September 17th, we've been seeing the opposite of that. And this is one of the reasons that I remain bullish in USD, not because I think President Trump is going to fail, but because I think that there's a degree of balance or stability that's needed in currencies. And given this brash and dramatic sell-off that we saw in the first half of the year, I think there's going to be some profit taking in this trend. Now, I followed this setup in these videos over the past month and change. And I believe when I first began looking at it, we were right in here, right around that 97.5, 97.60 area in DXY. We've since continued up to a higher high and a higher low, and then another higher high today, or yesterday, rather. Now, that higher high yesterday is a fresh 4-month high in the USD. And again, we have this bullish structure that has so far continued. The way that I look at these, because I try to avoid predicting, especially based on like gut feel or what I hope is going to happen, the way that I try to look at these is there's now this bullish structure, and as long as buyers can hold support at a higher low, then the door is open for more. 99.40 is the next logical area of support that's nearby, and by the time you're watching this video, it may already be in play. 98.98 is a significant level below that. And if we look at this from the weekly chart, you'll notice this 98.98 level. This has been in play ever since April. It set this low, it caught this low, that low. It came in as resistance again. Now it's a significant area of support potential after having shown resistance over this like 5-day period. And then below that, we have this swing low at 98.60. This was a prior swing high, a point of resistance turned support. And I'm looking at that as like an S3 level. If we get below that, I'm not necessarily going to get all bearish on USD. It's not until we fill that gap from earlier in October that I'm going to say that bullish trend has failed. The sell-off is coming back. And ultimately, President Trump is getting the weakness that he wants to see. But for that to happen, I think we're going to need to see the euro as really strong. I think we're going to see Japanese yen strength come back, which is a distinct possibility given the possibility of a rate hike out of Japan at some point in the not-too-distant future. And maybe it's a carry-unwind scenario, but I think that's a little bit more distant from where we're at right now. getting back to the perhaps more interesting part of this, looking at the bigger picture. Now, while President Trump may not get the USD weakness that he wants in short order, I do think ultimately his drive towards cryptocurrencies is something that will continue to support prices in Bitcoin. And what I have right here is the DXY chart overlaid as a line chart against Bitcoin as a candlestick. I wanted to point out that the correlation here is far from perfect. There are periods where this was positively correlated, such as we saw last year around President Trump's election, when we had the Q4 reversal in the USD, and then we also had that massive run of Bitcoin strength, again, shown as the candlestick chart in the background. So it could be positively correlated between these two markets. But I think more likely is the inclination for inverse correlation. And we could see that, again, at multiple times. So like we had this meteoric rise in the US dollar in 2022. And notice for the first part of that, positively correlated. And then Bitcoin turns, goes sour. And then as USD strength really takes off, that's when Bitcoin begins to sell off more aggressively. The dollar topped right here in October of 2022. It was just about a month later that Bitcoin bottoms. And then as the USD comes down, Bitcoin comes back to life. So again, my expectation is that there's an inclination towards inverse correlation, but I'm not expecting it to be perfect. But where this sequence plays out is once this current run of USD strength runs its course, and I'm looking for the 102 handle. This is probably a later Q4 type of item, but once 102 or perhaps a little bit higher around 103, maybe even 105 comes into play, once one of those resistances finally takes over, that's when I think Bitcoin is going to be in a position to really shine. Again, it may take a little while, but if we look at this Bitcoin chart, as this USD strength has really come to life over the past few weeks, and so far since the Fed's rate cut, Bitcoin has very much been on its back foot. We are currently seeing that test at 100, and bulls have had ample opportunity to push this higher, to reverse this off of 100. They haven't been able to do so yet. So it still looks like there's not yet a low end in play at this point. What could change that is a short-term trend of higher highs and higher lows. So, we would need a pretty significant break of 105, a retest of 110, and ultimately that 110 handle is what buyers are going to need to reclaim to show that they are able to take control. But I think longer term, this moves in a pretty similar direction as to what we've seen since the dollar topped back in 2022, which is we might get a pullback, but the general trend here is and has continued to be higher. So, maybe we get a clearing out of some of these stops that are probably around the 100K marker, but 95, 90 both become areas of interest for that long-term higher low support. Because again, like we've heard from President Trump, he wants to push cryptocurrency strength. He wants to push US dollar weakness. And he wants a strong and aggressive stock market. And he's going to, I think, move as many chips as he has to make that come to fruition. And I think as traders, the best we could do is try to notice these trends, jump on the side of the trend, and try to work with support and resistance in effort of instituting some solid strategy. But that, my friends, is what I have for this week. I want to thank you very much for your time, and as always, happy trading.